Hi, good morning. You're watching The Market right here in ET Now with me, Aisha Faridi, Awan Dabash, and Nikush Dalmia would be with us shortly. And what a market this is turning out to be. Already made it to those 2023 highs. We're at that 18,700 print, closing in on that 18,800 level for the Nifty futures. So yes, to put it into exact figures, we're only 150 points away from that life high. In fact, we've been seeing higher than average volumes as well, at least on the National Stock Exchange. So the market setup is looking picture perfect. More to do with the kind of flows as well that we've been seeing off late. And that really is instilling a more broad-based move in the markets. Look at what's happening for the broader indexes, for instance. The Nifty Small Cap, it's already sitting at a 52-week high. The Midcap Index is already at a live high. And many individual stocks are already sitting at their 52-week highs, both from the Nifty as well as the broader markets. And it's good to see that, more and more you are seeing an increase in participation. So yesterday, for instance, when we did clock to those 2023 highs, that of 18,700 plus levels. By the way, there was no participation coming in from banks. It was actually on telecom, FMCG and metals. And if you were to pick up the top 5 gainers within the index, it was the most unusual set. So a Tata Consumer, that was your top Nifty performer, which held out by 4%. There was Britannia, which in any case has had an excellent 2022 that continues to put on more weight. And now with the cool-off coming in and palm oil prices, most of these FMCG plays are getting a further push in the markets. There was BPCL, that was up 3.5%. Nestle held out 3%. And then there was HDFC Life and Tata Steel along with JSW Steel. So point I'm trying to make is the entire banking pack, your heavyweights, TCS's, Reliance's, HDFC Banks of the world were completely amiss from that top 5 list. And yet the Nifty did what it did. In fact, banks were actually an underperformer, as were some of the auto names like an M&M as well as Maruti. But the market did it on its own. So yes, picture perfect market, and today, of course, all eyes are going to be on the MPC meet. And Avan, it seems like status quo is pretty much on the cards.
Absolutely. Majority is indicating that we are going to see a status quo this time around yet again with the RBI meet. Do remember, it's the second monetary policy of the new financial year, and this is coming in after a 2-day review looking at all of the economic impact of a series of the interest rate hikes that had been delivered in the past year itself. Do remember, in the last meeting in the month of April, the RBI had paused on its rate hike cycle. They had stayed with that 6.5% repo rate, before which they had accumulatively hiked repo rates by close to 250 basis points since the month of May 2022, largely on the back of inflationary pressures led by the Russia-Ukraine war. So this time around, the expectation is that the RBI is going to leave the key interest rates unchanged, so 6.5%. And that is what the expectation is, because given that it's already reached its peak and it's likely to stay at this level for the rest of the year, which is actually lower than the 6.75% terminal rate that had been predicted a few months ago. The expectation is also that there will be a stance from withdrawal of accommodation to a neutral stance this time around. So the street will closely be watching out for it. Less than 2 hours away, we'll get in a better picture as to what the Reserve Bank is going to do. But a quick check-in on how the global markets as well fared overnight. And you had the Dow Jones, which was absolutely flattish. The S&P 500 and the NASDAQ did see a little bit of a negative rub-off, particularly for the NASDAQ. That's largely on the back of GameStop, which tumbled about 20% in trade. In terms of macroeconomic data, you will have the Federal Reserve's upcoming policy meet. That's on the 13th and 14th of June, and more macroeconomic data later today. But other than that, for the Asian screen as well, it seems like it's a bit of a quiet start for the most part. You've got the Nikkei as well extending its decline, and the Kospi as well, which is in the red. A quick look at the SGX Nifty, and there you have it. A quiet start, Aisha, is what the indication is ahead of the RBI policy today.
And we're not complaining. The SGX Nifty is already indicating a future print of 18,800 plus levels, so practically almost there. And just like I said, 150 points only from that all-time peak. But I think the big news maker and part of most dinner table conversations yesterday was the Times Network exclusive with the OpenAI founder and CEO. And, to put it simply, simply in common man's language, the founder of ChatGPT, which has really shaken up the world market. Sam Altman, he was in New Delhi, and he says that, when asked about whether or not this is going to be a threat to jobs, that's ChatGPT, he said every tech revolution leads to job market changes, and we should be prepared for one coming in with ChatGPT as well. He said, of course, that India has completely adopted and truly embraced ChatGPT. Also saying that, when it comes to artificial intelligence, we are currently at an exponential curve for AI. And he said this is going to be the internet moment of the previous 2 decades. And this is going to be as life-changing and as game-changing for how the world actually thinks and goes about their daily day. He says ChatGPT 10 may be an extremely different thing though, but ChatGPT 4 cannot cause an existential crisis just yet. So, yep, that was the interview. In fact, let's hear out a slice of that interview from yesterday.
Yes, every technological revolution leads to job change, and this will be no exception. I guess 3 thoughts. Number 1, job change itself is fine. If you kind of look at the history of this, in 2 generations we can kind of adapt to any amount of labor market change, and there's new jobs, and the new jobs are usually better, and that's going to happen here too. Some jobs will go away. There will be new, better jobs. They're difficult to imagine as we sit here and dream about what the future is going to look like. The thing that might be different about this is the speed with which it could happen. And I think it will require a change to the socioeconomic contract and the way governments think about this if it happens at a very fast pace. The second thing is it's not going the way people predicted so far, and I don't think it will in the future. So the current systems are actually not very good at all at doing whole jobs. They're very good at doing tasks. And so the nature of the job, if you're, say, a computer programmer, to stick with that example, shifts to you kind of like manage a team of extremely, extremely junior developers that can only do one-minute task at a time. And then someday they'll do 10-minute tasks, and then they'll do an hour task. But you'll still have to think of, like, how is this all going to fit together, what do I want to build, and maybe eventually it learns that too. But this idea that instead of replacing jobs, it's making people dramatically more efficient, and there is such a demand overhang in most places. If we can overnight make the world create 3x more software because we make every software developer 3 times more efficient, that is not nearly enough. That does not nearly fulfill the demand the world has for software, and I think we'll see that in many other places. So another example of this is that the consensus, not the consensus, the absolute belief of experts around the world 10 years ago. First, AI is going to come replace the physical labor jobs. So truck drivers, farmers, factory workers, real trouble. Then it'll come for the sort of easier kinds of cognitive labor. Then maybe eventually like computer programmers, even a mathematician. And then, way in the future, or maybe never, because maybe it's like magical and human, the creative jobs. And of course we can look now and say it appears like it's going exactly the other direction. But that was like really non-obvious, certainly to us. We started thinking we were going to build robots. And it still, in some deep sense to me, seems like it should be much easier to make robots than it is to make GPT-4. But here we are. I think with other job impacts, it's just going to be surprising. But I think the world will get way wealthier. We'll have a productivity boom, and we will find a lot of new things to do. First of all, it's super impressive to see what India has done, I think, in a way that really no other country has, with these sort of saying we're going to do national technology really well and like make it a really like a national asset. In terms of AI strategy, I think there's like a lot of things that can work. I think this question of sort of AI sovereignty, none of us have an answer to yet. Feels like it's going to be at least somewhat important. But the main thing that I think is important is figuring out how to integrate these technologies into other services. And that is an area that I think governments are behind on and don't have the answers to yet. But, I think like hopefully we all start to use LLMs to make government services way better, and both from like how do I enroll in this program to like how do I get better healthcare. Yeah, I think it is good to have certainly some sort of AI research effort. What exactly that should do, should that be training ground up LLMs? Should that be pursuing new research directions? Should that be focused on fine tuning open source projects? I think there's a lot of options there, and I don't yet have conviction on the right answer, but some, nationally funded AI effort feels like a good idea.
All right, there you have it. That's the word coming in from Sal Altman, talking about AI being a disruptor for sure. Isn't going to be a permanent job killer, but the speed of change is going to be very rapid. Okay, let's get a move on then. What is the other global commentary that we're getting in? We've got Anisha joining in to give us a view on just that. Anisha?
Well, yes, AI is not only forming part of the dinner table conversations here in India, but across the globe as well. So that's the word coming in from Paul Krugman, who's trying to use it for some sort of economics here. He's talking about if AI does increase the productivity the way that Tom Altman was talking about, it's time perhaps that we need to look at the fiscal math of what it will do to growth and GDP estimates going forward, given the productivity can rise with the help of AI. So that's the word coming in from Paul Krugman. Separately, you have the big investor Stanley Druckenmiller talking about what's happening in the US economy. Now, he says that the US economy is showing sign of resilience, but a recession is more likely to happen when it comes to the US economy, and perhaps there are more bank failures which are lined up for the country. So that's the commentary coming in. Given the fact that inflation has been persistent, he is expecting some sort of issues to continue as far as US economy is concerned. But the conversation comes back to AI, and he is saying that unlike crypto, artificial intelligence seems to be the real thing, and as a result of that, he is banking big on it. He says that Nvidia is something that they want to own at least for the next 2 to 3 years. It's not a short-term bet that they are taking, but they would like to own Nvidia for a long time. Shifting focus to the commentary coming in from Ray Dalio. Again, a bit of somber commentary coming in because he believes that we are only at the beginning of a late big cycle debt crisis. So he is expecting there is going to be a debt crisis happening, and we're only at the beginning of that. Having said that, he does not expect the interest rates to rise much from where we are. But artificial intelligence is again something which he's betting big on, saying it will be bigger revolution than the internet. So really, it's all about artificial intelligence across the globe. Lastly, just wanted to flag out what US Treasury Secretary Janet Yellen had to say. She also believes that there is a possibility that smaller banks are likely to see some consolidation, and she expects that there could be more issues that happen in the commercial real estate sector given the changing approach to work. So overall, that's the commentary coming in from Globe. But yes, artificial intelligence right there at top.
Right, yes indeed. AI is the buzzword, and it clearly is being talked about world over. Let's move right on then and chat about the markets and find out what levels are being discussed by our chartists. We've got Naresh Mirani as well as Kunal Bothra joining in. And Kunal, look where we are, already perched at above the 18,700 mark, making our way to those life highs. Do you believe that it's only a short time away to hit those levels? And more importantly, will it be led by the banks and the heavyweights, or do you think that it's going to be the broader markets as well that will add to the mix?
Good morning, Avan. So I think more than hitting, it's sustaining, which is very, very likely for the indices above the possible new highs for the index over the near term. We've seen a very good mix for the index as well as the overall market. So mix of sectors, the erstwhile defensives like FMCG, pharma making a strong comeback, the high beta pockets like real estate making a very strong move over the last 1 to 2 months, and the durable sectors like the auto, cement, etc. Even these stocks have made very good strides for themselves in the last couple of months. And it's a good mix where not just the leader stocks or the erstwhile leader stocks which have done reasonably well, but even the underperformers from most of the sectors, even those stocks have made a very good comeback for themselves. Many of the stocks have actually hit new highs, as well as some of them are very close to their 52-week highs. So I think that's a good mix of sectors and stocks. Now the data yesterday was very intriguing because we've been talking that the Nifty is outperforming the Bank Nifty over the last couple of days. But a day like yesterday, where the open interest jumped by almost 8.5% on the Nifty, as well as compared to the Bank Nifty, it was just 1%, 1.5% rise on the open interest on Bank Nifty. So that tells you that the inclination is more towards the index, towards the Nifty at this point of time. And that's what I believe one should probably position in terms of an index play. So would be bullish on the indices and expecting a new high, more, as I said, more than a break of a new high, it's a sustaining of a new high, which I believe is very much possible this time around.
Okay, Naresh, what is it that you're betting on? Will banks also participate, much unlike yesterday's underperformance?
So I think banks are ready to participate. If you look at the two largest banks, which have almost 50% weight in the Nifty Bank, are interestingly placed. So you have ICICI Bank right at the top. The previous highs are at 960. The base is at 930 for the last 2 weeks, making a classical pause or a flag pattern around the breakout point. So that is the one which could lead, and say crossing 960, we would go quickly to 1000, 1100 levels on that one. So that is ICICI Bank. The other one is HDFC Bank, which has corrected from 1730 back towards the 1600 mark, where it has been for the last 2-3 years now. Now, if you look at the shorter term supports, which are at 1550 to 1590, a very strong band of support around that area. And from that area, we can start seeing a reversal and going towards 1730. Now, both these banks doing that would imply Bank Nifty can easily make a new all-time high and also give a fillip to the Nifty as well. So expecting banks to take leadership, and specifically a little bit of a bounce from HDFC Bank or a breakout move from ICICI Bank, because those are the heavyweights. The other banks continue to look well, but these heavyweights can change the momentum. So expecting them to do so.
Okay, let's get stock ideas as well. How is it that you can make the most of these fresh highs that we're seeing on the index, or actually still 150 points away, but practically in any case there? Kunal, what are the stocks that you're betting on?
So betting on the Auto Pack, and Maruti is one of the stocks which I would bet on. I think that's a stock which has been an underperformer, but it's making very good strides over the last 1 or 2 weeks. So I would bet on Maruti for a potential target of 10,000, stop loss to be kept at 9,550. And BHEL is also the other stock which has remained a bit low, I would say, in terms of the last 1 or 2 weeks of price performance. But the volumes, the price patterns are very intriguing for BHEL, indicative that the momentum would probably speed up for the stock. So would suggest a buy on BHEL, 90 as a target, stop loss at 80.
Okay, there you have it. Let's find out what exactly Naresh is picking out for the day. Naresh, what's on your radar?
So first is a buy on ICICI Bank. The stock is very close to the previous all-time highs, making a pause around that area, a classical flag formation in the making. Once it breaks out, it could see a quick move. So preempting the buy here. For the last 2 weeks, it has made bottoms around 930-35 levels. So at 940, the risk reward makes it very interesting. So stop loss at 925, a first target price of 1000, and could go much higher. Second is a buy on Indus Towers. Now this is a stock which has corrected a lot over the last couple of years. And the stock made a top around 330 levels back in September 21. Since then, it has corrected one way down all the way to 140, 150. Classical double bottom formation around that 135 mark back in February as well as in May. The recent bottom around 140, 45 was a higher bottom. And the swing high in between has been around 160. Yesterday was a good breakout above the 160 mark. Indicates a long-term reversal could be in the making. So if this continues, it could go all the way to 185 to 200 levels. Stop loss to be kept at 156.
Okay, let's talk about the big event of the day that we're all anticipating. All eyes on the MPC outcome, right? Will the committee hold the rates or revise them upwards, or for that matter, even bring them down? I don't think there is a case to really revise them upwards. But Ankur joins in to tell us what to expect from the RBI governor today.
Reserve Bank of India Governor Shaktikanta Das will detail monetary policy, and all eyes will be there whether or not there is a change in repo rate, because the wide expectation is that there will be pause once again, which is going to be announced by Reserve Bank of India Governor. But we need to wait and see whether or not there is some googly from Reserve Bank of India Governor. He has already mentioned it is a pause, not a pivot last time, and now it will be interesting to see whether or not there is a change in interest rate or not. Apart from that, the growth target will also be something to be watched out for, because last time there was a revision in GDP target from 6.4% to 6.5%, and since CPI numbers have come better than anticipation, it will be interesting to see whether or not current year's CPI target is also revised accordingly. One also thing which is going to be watched out from banker side is liquidity situation, because in the last few weeks the surplus liquidity in the system has improved. So what are the other steps steps which are going to be announced from Reserve Bank of India governor on the liquidity front is something which market is waiting. And moreover, what are the steps which Reserve Bank of India governor is going to announce outside monetary policy is something which will be interesting to see this time.
Okay, that's the expectation. We'll be getting you all the details of the RBI policy in just a couple of hours from now. But time to slip into a quick break. Be right back with all the stocks in news.
Back with the market right here in ET now, 150 points away from that all-time high on the Nifty. The CNX Midcap 100 Index already there at its life highs, and a 52-week high coming in for the small cap index as well. But a lot of stocks and sectors which are in focus, and Tata Motors in specific after its analyst day, there's been a lot of brokerages which have reacted to the takeaways. Nomura, Motilal Oswal, they've all maintained a buy on the stock, while Morgan Stanley gives an overweight call. Sharad, in fact, is here to tell us about what these brokerages are now making of the moves on Tata Motors. Sharad?
Well, yes, yesterday Tata Motors analyst meet was there and the brokerages have come out with their views today, and it's largely on the positive side. However, largely the target prices have not been changed. And if you look at the key brokerages, CLSA has actually maintained a buy rating with a target price of 624 rupees per share, while for Nuvama they have maintained a buy rating and they have actually revised their target price, coming in at almost 645 rupees per share. Earlier it was 620. Nomura has also maintained a buy rating, target price remains 610, while for Morgan Stanley they have maintained overweight with a target price coming in at almost 617 rupees per share. Now yesterday the stock itself hit its 52-week high levels, as well as the company stated in its analyst meet that roughly they will be intending to increase their margins by 3% in the medium term basis. Now overall the brokerages have stated that there is an expectation that there will be a continuation of the positive cyclical upturn coming in, especially for JLR as well as the PV and the CV segment. Now market share gains are also expected. That's what the brokerages are factoring in, especially for the PV segment, with the leadership coming in the EV segment. Apart from this, also the company is aiming to increase their free cash flow, and that is something which is a very positive point, as pointed out with the brokerages. And they also expect that the Tata Tech's IPO will be also a very important thing when it comes to the deleveraging plans for the group.
In fact, staying with Tata Motors, Nuvama Institutional Equities is also betting on Tata Motors. In fact, they see an upside in the stock, and significant one at that. Let's hear out that their rationale on Tata Motors.
Yeah. Currently, my target price is 620. That offers a 15% upside from the current levels. Please note that about 65-70% of my profitability estimate comes from JLR, where I am working with a 6.8% EBIT margin for FY25. And management is targeting 10% EBIT margin for FY26. So couple of good quarters on profitability side, then I see upside risk not only to my assumption but also to street assumptions.
Okay, an Indian two-wheeler major, Hero MotoCorp, is now planning a boost to its motorcycle business with the launch of a new program called Hero 2.0. In fact, the program is going to be involving an entire new range of premium motorcycles, in addition to giving a new look to its stores and launching some new premium stores as well. In an exclusive interaction, ET Sumit Chaturvedi caught up with Hero MotoCorp's new CEO Niranjan Gupta to know exactly what the company has lined up.
In terms of moving forward, look, we are very strong in the commuter segment. Priority is going to be to win in a new segment. For instance, we are talking about premium, where we want to win. And you are going to see a lot of launches which are lined up in the current year. Similarly, another priority is going to be build leadership in EV. And that again, we've already announced that not just 10 cities, 20 cities, but this year we are going to go 100 plus cities in the current year. So these are going to be some of the priorities. Primarily, if you ask me, we're going to change the gear.
Okay, that's a priority going to be. But what about the overall picture, big picture? You said you want to enter new segments. You want to, break away from the overall image of being a commuter bike maker. premium bikes are coming. Tell us more about the premium plan.
So firstly, this year you will see the maximum number of premium launches compared to any other year in Hero's history. And I won't give out the name, but they will roll out every quarter. And you will see very exciting product coming from our lineup. The second exciting part about this is the association with Harley. And very often we have been asked a question that while you may have the product, but what about the brand imagery? And Harley, as you know, is known as a premium brand, super premium brand. So therefore, the association of Harley and Hero is going to address that brand question. And the third thing we are going to do is to provide a different level of retail experience and retail excellence for our premium customer segment. And that you will see moving forward, where we are actually going to do a facelift of some of our current stores. We are calling them Hero 2.0, where a lot of our current stores will get a facelift and provide a much improved customer experience and services in those stores. Other than that, we're also going to have some number of exclusive premium stores as well.
Okay, and let's talk about the sales then. What kind of sales growth do you see this year because of the premium bikes coming, because 2.0? What kind of sales growth, better than industry or with the aligned with the industry?
So while I won't give any number guidance for our number for this year, but let me answer that in a different way, that overall, the economic indicators are tracking in the right direction. You look at the GDP growth, you look at the GST collection, you look at hospitality industry, you look at real estate, all asset classes.
All right, looking to launch a new product every quarter. That's part of the game plan for Hero Moto. Let's shift gears then and discuss PB Fintech. Bank of America has downgraded PB Fintech to underperform from buy with the target price unchanged at 600 rupees. What exactly do they have to say in their detailed note? Vamakshi joins in with the details. Vamakshi?
Well, yes, PB Fintech isn't focused on the back of that brokerage note from Bank of America. Now, when we look at how PB Fintech has moved in the year so far, we've seen a 42% uptick as far as this counter is concerned. And in fact, with the current market price, most of the positives are looking largely priced in. In fact, the valuations are already pricing in management guidance of net profit of almost 1,000 crores by FY27. Now, important to note that the company posted 80% growth rate in FY23, but going ahead, this growth rate is expected to slow down to 30% given a high base. But other than that, cutback on ad spends could also pose a downside risk to the growth. The fundamentals for this counter, however, are good, with low online insurance penetration, strong 90% plus market share, as well as the core insurance business that is profitable with nearly 13% EBITDA margins. Now, at the current levels, the stock trades at an FY25 price to sales of almost 6 times as compared to a 3 times of Paytm. Now, all the factors that are working in favor of the company looks largely priced in, and that is the reason Bank of America has actually downgraded its rating on this counter from buy to underperform, but the target price is left unchanged at almost 600 rupees per share.
Thanks very much, Vamakshi, for giving us those details. The stock price yesterday was a buzz in the session. Today, we'll be watching out for it on the back of that BUFA note. Moving right on then, Jefferies has come out with their fresh note on the healthcare space. They're stating that Fortis Healthcare and Max Healthcare will be the top beneficiaries of the central government health scheme rate revision. Let's understand a little bit more about the rationale. We've got Ashesha here with that perspective. Ashesha, hi.
Well, yes. So healthcare companies, the likes of Apollo, Max, Fortis will all be in focus today, and that is because on the back of this note that has come in from Jefferies. Remember, central government recently revised CGHS or Central Government Healthcare Scheme rates for certain categories of healthcare services. Scheme provides subsidized treatment for as well as former employees of central government. In fact, the current rate revisions were limited to IPD and OPD consultations and certain room rent charges. And news reports also suggest that diagnostics and treatment pack rates will also be revised from July 2023. Current rate revisions suggest average price hikes in the range of 10 to 20%. In fact, Jeffries' report also suggests that diagnostics and treatment packages could be revised upwards anywhere between 5 to 30%. Jeffries believes these price revisions might happen sooner rather than later. As far as their estimates are concerned, they believe these price revisions will drive earnings upgrade for most of these healthcare companies. Fortis and Max are likely to benefit the most. They estimate EBITDA impact of about 3.5 to 6% for most of these healthcare companies. Max and Fortis have about 17 and 19% revenue respectively coming in from this particular scheme. Apollo and Medanta have about 10% contribution, and rate revision could have meaningful impact on EBITDA of most of these hospital companies. So on the back of this price revision that has come in, and subsequently on the back of this Jeffries note, all of these healthcare counters will be in focus today.
Okay, healthcare space in focus. And meantime, BSNL will be getting a fresh package of 89,000 crore rupees from the government. Why is the government spending so much on the telecom and what is it in it for taxpayers? Prakash Priyadarshi reported this earlier.
See, the Union Cabinet has taken some important decisions today, and the first one is with regard to announcement of financial package for revival of BSNL. The Cabinet has approved approximately 89,000 crore financial package in order to provide financial support to BSNL. This amount will be spent on allotment of 4G and 5G spectrum to BSNL, and that's third such financial package so far that has been announced by the government to improve financial condition of BSNL. So put together, the overall financial package has been increased to rupees 2,10,000 crore from existing 1,50,000 crore. If you look at the other details that has been shared by the government, the highest allocation has been made for 700 megahertz band, that is approximately 46,000 crore, and after that 26,000 crore has been allocated for 3,300 megahertz band. So the objective behind this announcement is to improve financial condition of BSNL, also enable them to provide 4G and 5G services across the country. A strong PSU is also important in telecom space to check any possibility of private sector's monopoly. And if you look at the government standpoint, it has strategic importance as well.
Okay, let's connect then with Anand Tandon as well, who's joining in on the show to share with us his fundamental outlook. Hi there, Anand. Good to have you on board. What's the outlook on the index after scaling those life highs? When we do you believe that we're likely to hover around those levels? What would be your outlook in terms of the next key triggers for the market?
Well, the first thing one is looking for is obviously the view on interest rate, and right now the consensus is that we are in for an extended pause. If that were to, that would be enough for the market to be propelled to a new high for the moment. That said, it's not as if the markets are extremely cheap, so the overall upside can still be not very far from where we are. For the near term, from a trader's perspective, obviously that means you stay long and not try and outguess where the market will end, because the market can probably become even more expensive from where it is. Currently, it is not very expensive. It is just about marginally at long-term valuations average. And assuming the earnings hold up, the forward is 1 year forward earnings are also, the estimates are indicating that the market is trading at around 18 times or whatever, which is not particularly expensive. So for the moment, fundamentally, I would argue that one should still be biased on the long side. But as it goes up, obviously, you want to increase a little bit of caution.
There you have it. That's the outlook coming in on the markets as a whole. But let's also get in a sense as to what your view is when it comes to the entire new age tech space. For instance, today PB Fintech has got a report from brokerage BofA, and they believe that the growth rate will slow down and the cutback in ad spends is going to be a bit of a risk to growth. Recently, there was an upgrade coming in on Nykaa as well. How are you looking at the entire space?
Well, they are still looking quite expensive to me. There is a conundrum there. If you want to show profits, you have to stop the kind of mad rush for client acquisition that many of these companies have been going through. And if you were to do that, then the case for having a very high valuation becomes even less, because slow growing company is not what you're betting for when you have the kind of valuations that these are trading at. So really, you have to take a call on whether or not you will be able to grow at least significantly high clip, despite cutting back on the spend that one is doing in terms of the acquisition. That said, you do have to remember that the tech companies have one advantage, which is or disadvantage, depending on how you look at it, that the accounting systems do not consider client acquisition and the brand spend, for example, or even the tech investments as capitalizable assets. And because of that, while the accounting prefers companies which have hard assets, the earnings growth for many, the earnings potential for, and the universe for many of these new age tech companies is far, far bigger. And therefore, it makes sense for them to be spending money. So I think they have to maintain a balance between making sure that there is enough earnings for the market to remain interested, at the same time delivering above significantly high, top range kind of growth for you to be able to justify the valuation. I think it's a tough ask. Some more time should elapse before you will be able to really make a view on which one of them are really going to do extremely well and which justify the earnings and the valuation that they are at.
Okay, that's the take coming in the new age tech space. But here's Rhythm Desai from Morgan Stanley on the sidelines of their conference. He spoke with us yesterday, telling us why they continue to bet big on both NBFCs as well as industrials.
I think this is a new investment-led economic cycle that we are at the beginning of. And investments, particularly in the private sector, are starting from pretty low levels. In the previous cycle, in the first decade of the millennium, we went from 4% of GDP and peaked at 17. We're around 5% right now. So this number could go well into double digits in the coming 3 or 4 years. So it's a very strong outlook for industrials. I think you will see order books going up everywhere. They are already going up, and that momentum and that trend may continue over the next several quarters. But I stay constructive, and we are actually overweight the sector. So it's a good space to be engaged in. I think we're the throes of a loan boom, given where we are starting on corporate debt to GDP, and given that we may be seeing a pretty strong investment cycle. So credit growth could be materially higher than what we've seen over the last 10, 12 years. And that should favor financials. Within those, I think at the moment at least, because our view is that the rate cycle has peaked, the non-banking lenders may see a better margin situation than the banks. So the banks will have to go through some consolidation in NIMs or maybe even a decline in the coming 12 months. And to that extent, I think the NBFCs look like a better space. But with the 3 to 4 year view, I think all the lenders are going to have a very good time. And generally speaking, we are bullish on the financials and overweight. In fact, it is our biggest overweight and most strong recommendation that we are making to investors.
Okay, that one big sector yesterday was surely telecom. So be it the move on a Vodafone Idea, the fact that Bharti is scaling new highs, and Tatacom, that was the interesting one. That also held out just very, very smartly. In fact, from the analyst meet, the takeaways are extremely positive. We're going to be chatting with the management as well in the due course of the show. They're expecting to double their digital revenues over FY23 to 27, and they're looking at a margin range of 23 to 25%. Naresh, you were talking about Tatacom as one of your key bets yesterday, right? What's the call on the stock from here? Further up move?
So I think Kunal also likes it, but technically the stock has given a breakout from the 1300, 1400 zone. So the previous top was around 1400 back in Jan and February, where it looked like a breakout. Failed and again went back to 1200, and now this breakout about 1300 1400 has shown good momentum, and the stock has continued with 4 to 5 uptick days. Overall, now it is setting up for a longer term move, wherein the stock has consolidated after that big spike in 2020 to 2021 end, which is where it topped out around closer to 1550 1600. So a shorter term target price is 1600. And then maybe we could see a pause. But structurally, after a 12 to 18 months or even more of consolidation, the stock is setting up for a fresh trend. So for now, it's a buy at current levels, add on dips to 1350, 1400. Expect some bit of a pause or at 1600, but overall the structure has become clearly positive.
Okay, meantime, let's also get in a sense as to what the outlook is on some of the stocks that had a bit of a breakout session in yesterday's trade and what exactly has been buzzing. Vodafone Idea, that's been a stock, Naresh, that saw a pretty encouraging breakout. What's your view on the charts? And then you did have some fervor within the sugar names, Sri Renuka being one of them. Any interesting patterns?
So Vodafone looks interesting because the point is for the last so many months it has been making lower tops and lower bottoms, and there have been one-day spikes and then again a flop down move. But what we've seen over the last 2 months is it has made a slow and steady rally before this one-day spike yesterday. So the stock had gone all the way down to 6 rupees, made a move to 7, consolidated around that 7 area for almost a month or so. And now yesterday's move is a breakout move. Now what we need to see is whether this flops out or goes all the way to 10 rupees. That is the major resistance for the stock. Now it's a risk reward trade here wherein you can keep a stop loss at yesterday's low and buy any fade off today. So at 765 yesterday's close, if it dips to 750, 730, you take a buy with a stop loss at 7. And if this actually is a turnaround move, it could very well go towards the 10 mark. So Vodafone Idea looks interesting. Sri Renuka is still not say a big recovery. The rest of the sugar names have better charts.
Anand, what is the best way to approach the telecom space, which has just such few options, right? I mean, you've only got a Bharti and a Jio here.
There is no reason why you should not be buying a Bharti or a Jio. I mean, at the end of the day, those are the market leaders and will likely remain. Vodafone is way behind in terms of investing in capacity, in terms of 5G, etc. They are going to continue to lose market share for the foreseeable future. I don't see BSNL making a material difference. So from a core telecom perspective, I think the standalone Bharti is probably still remains the best way of playing the sector. Reliance hasn't moved too much over the last few quarters. So that can also be a place where some surprises are possible, because over that time frame, the retail business has done exceedingly well. They have grown quite considerably. The refining is obviously continues to do well and is likely to report decent numbers. I don't see any of the sectors that Reliance is operating in being under any serious pressure.
Well, defense and railways, that continues to be the other space which we continue to actually look out for. And it's been no different of late than what these stocks have already done in the last 6 months. Look out for Titagarh Wagons. That's going to be another stock to look out for. The board is looking to consider raising funds via QIP or a rights issue on their June 10th board meet. So that's going to be another stock. In the last 6 months alone, it's moved up 94%, and that's been a staggering move at that. And then we already know that the current darling really seems to be Mazgaon Dock, right? They've signed an MOU with ThyssenKrupp Marine Systems for building submarines in and for India. This is going to be contributing to the engineering and design of the submarines. That's the ThyssenKrupp contribution, and also provide the consultancy support, whereas Mazgaon is going to be taking the responsibility for constructing and delivering the respective submarines. So these are a couple of stocks which are in focus. And of course, as would bank stocks be, we've completely forgotten that it's the policy, and yes, while it's a status quo which is anticipated, but let's see whether the governor has anything more to say on whether this is a pause or a pivot, and if not. But here's Deepan Mehta telling us why he continues to like NBFCs as well as banks.
In any sector which you are positive on, if you go down the line, look at the tier 3, tier 4 or tier 3 or tier 2 companies or the mid-cap companies within that particular sector, then you will find that in bullish markets like this, those companies will tend to outperform the market leaders or the large cap companies within that sector. So for example, if you like the NBFC space, then companies like Cholamandalam, MFI companies like Spandana or Credit Access, Poonawalla Finance, I think Awas Finance, these are the companies which will tend to outperform the larger ones like say a Bajaj Finance or a HDFC for that matter. And similarly down the line, when you go to banks, I think smaller banks like IDFC First Bank, AU Small Finance Bank, to an extent Federal Bank, and even IndusInd Bank, they may outperform the ICICI Axis and Kotak HDFC banks. And that particular investment theme is true across many sectors. You can play it out. You can see it being played out in software, in pharmaceuticals, as well as in capital goods and engineering companies as well. So, I mean, there are many sectors which are in sort of a blue sky scenario, looking at good earning visibility. But within those sectors, if you go for mid-cap stocks, you can have them outperforming the index and the large cap peer group companies.
Okay, meantime, I wanted to get in your take, Anand, as to what you make of the entire auto space, talking about new launches as well coming in from the likes of Hero Moto, EV plans, ambitious plans from a lot of these auto companies. Which are some of the stocks that you like within this sector?
Well, Hero Motor could be a surprise because they have been one of the laggards losing market share consistently, but they seem to be now indicating that they have a whole new set of launches. The only risk is that the launches may fail as many of their earlier launches have, but considering that their pipeline right now looks robust, and the valuation at which they are trading is extremely attractive. I think they are close to 4% dividend yield for a company which has been around for such a long time. Also, the market at which the end of which they so far have been traditionally servicing, which is the lower end of the motorcycle curve, that I think the rural markets will do well in the second half of the year, and therefore I would argue that Hero Motors seems to be in a space which is both attractive from a potential growth point of view as well as the current valuation expectations. For the rest, I think the street is very bullish on Tata Motors. Mahindras, I think, have become slightly expensive, but otherwise that remains an area to be looking at. Basically, I would prefer looking at Mahindras because of the fact that, as I mentioned, I'm more bullish on what is likely to happen in the rural parts of India going forward. So that's broadly the space. For the most of the others, I think, pure play EV is a little difficult to play because there are lots of players which are entering and it's a completely new market. So it's very likely that you will have new leaders coming through, not necessarily the established ones.
Interesting. Okay, OMCs, they are the one in focus, and we understand that the oil ministry has asked the OMCs to reduce prices and wants the benefit of the drop in crude to be passed on to the consumers. However, sources have told ET now that they are in still very much wait and watch mode. Prakash Shah, my colleague, is here with more details.
See, a discussion on reduction in petrol diesel prices in domestic market has begun. Our sources in the oil ministry are saying that the oil marketing companies are in better position now. Their financial conditions have improved significantly. There are no under recoveries on sale of petrol and diesel. In fact, they are making profit on sale of petrol. Apart from that, their last quarter results have been pretty good. So taking all into consideration, oil ministry is making a case to cut down retail prices in domestic market. On the issue of oil producers' decision to take further production cut, sources are saying that it's not going to have much impact because there is ample supply and no shortage of crude oil supply in the market. So they want a benefit of reduction in crude oil prices should be passed on to consumer. But when it comes to oil marketing companies, our sources are saying that oil producers have taken a decision to take further production cuts. So what would be the impact? That is something which should be taken into consideration, and better they will be wait and watch mode for now. Also, sources are saying that let's not forget the accumulated losses of oil marketing companies, which is still very high. As per the details that has been given by the OMCs, that the accumulated losses of the account of IOCL alone is around at rupees 78,000 crore, and at present overall accumulated losses in industry losses is at rupees 1.64 lakh crore. So sources in the oil marketing companies are saying that any decision should be taken after considering all aspects into account. So it's an important development coming in, as at one hand oil market OMC sources in the government are making case to reduce prices. Oil marketing companies have different opinion.
All right, we'll be watching out for those OMCs. Thanks very much, Prakash, for those details. Time to shift gears then, and Paytm as well is on the brokerage radar along with PB Fintech. Bank of America, yes, yet again has upgraded the stock. It's a buy rating, and they've hiked the target price, 885 from the earlier 780 rupees. What exactly is the rationale for looking at Paytm? We've got Anisha here to break it down for us. Anisha?
Well, Bank of America has downgraded PB Fintech. It has gone ahead and upgraded Paytm to the upgrade coming into a buy. The target price stands at around 885, and they're quite bullish about the risk reward that they're seeing in Paytm at this point of time. In fact, they say that Paytm is well positioned to continue to dominate the SME merchant space. They are also expecting that cross-selling is something that could augur well for the company. Yes, the Paytm's momentum in the merchant lending is likely to slow down, but at least it will continue to grow. That's the word coming in from Bank of America. They also say that operational leverage is there on the upside. In fact, they say that they see Paytm's margins improving on the back of the revenue mix shifting, and that means there could be a consensus upside coming into the estimates that they have, as well as what the consensus estimates are for EBITDA margins at this point of time. They also say that Paytm is in a sweet spot when it comes to the overall space because there's limited competition, and when you look at stuff like ONDC as well as UPI payments, Paytm could actually be one of the beneficiaries of the entire transition that we are seeing. On the back of all of that, they are expecting the consumer and merchant payments to grow at a pace of around 22% compounded annual growth rate from FY 23 to 25. And going forward, the channel checks also suggest that the business is seeing robust growth. So overall, a positive commentary coming in, and the target price now stands at 885 for Paytm.
Okay, those are some brokerage upgrades or other notes coming in on Paytm that we addressed with Anand just a short while back. But Anand, you know, that exclusive news that my colleague was just highlighting on OMCs, given the amount of strict regulations here and the sensitivity to oil prices, would you skip the sector altogether from an investment perspective?
Well, if the government keeps on coming out with regulation and trying to indicate where the prices should be, it has always been a problem in terms of valuing these companies on a longer term basis. For the moment, one had assumed that they would let them kind of move the prices around. And I'm surprised to hear about the fact that there is going to be an assumption that there is a drop in prices. I mean, I see crude going up actually from here for the rest of the year, perhaps. So the kind of numbers that the companies are reporting, you had last year was a good year where GRMs did well, marketing margins were not that great, and of course this is an assumption because they have stopped reporting separate numbers. But going forward, if you had that kind of flexibility, you would have thought that they would be able to recover significant amount, make significant amounts of money. If that gets capped, then I think it becomes a little more difficult to value them. Right now, they are good on the dividend yield, so they may be attractive from that perspective. But certainly, the growth numbers become a little more suspect.
Case on the stocks though yesterday, Kunal, right? I mean, I'm just looking at BPCL and I'm sure that was the state with the rest of the pack as well, a solid 3.5% perk up. What are you reading on the charts?
I think it's a very good move for BPCL, IOC, HPCL, because over the last 1 to 2 months, you know, the structure for these stocks have changed. Now, you know, look at it this way that the stock was languishing at this range of 320 BPCL for almost 2.5 odd months, start of 2023. And you know the upside range for the stock was around 350, or the resistance for the stock was around 350. In the last 1 or 2 months, the stock has not just broken past about the 350 mark, but actually that resistance has now become a support. In fact, 2-3 days back, when the stock retested the levels of 350, it managed to take support and then bounce back towards 368, where it closed yesterday. So that itself indicates a change of structure for a stock like BPCL. And you know, these stocks have come back to their, I think, a 6-month or a 7-month high in terms of price pattern. So that also is very, very positive for the chart structures for these names. Now, the only question is that, you know, how far can crude remain, you know, at this range of 75, 76 on the Brent. If it continues to do that, then I believe the trends could sustain for BPCL, IOC, etc. Otherwise, we may see a round of volatility which may come back again. So I think traders could probably you know, trade this with a very strict kind of a stop loss. I think 350 on closing basis could be a stop loss for BPCL and continue to hold on to long positions till then.
Naresh, what's the chart reading when it comes to something like a Torrent Power, which scaled up a solid 12% in yesterday's trading session, and select names as well within the railway space like a Rail Vikas Nigam or an Ircon International?
Torrent Power gave a breakout over the 550-600 mark, and the stock has just gone one way over the last 3 sessions. Now the problem is the breakout is huge, and the possible targets are also done. So at 700, 720, that would have been the target for the breakout. So for now, one will need to wait for a fade off towards the 640 mark to actually take a buy position here. So for now, the rest of the power names have started looking interesting. We can see a breakout in Tata Power, JSW Energy. So out here, one could now look at the other power names rather than Torrent Power. In terms of uh, the moves in the railway basket, we've seen a good move in RVNL yesterday thanks to the change in circuit filters. But overall, Ircon and RITES look interesting. RITES has been the only one which has underperformed. So that could be the stock which looks as the maximum best bet in terms of risk reward. So RITES at 380.85. And the stock has done a retest of the last breakout of 370, 380. The previous highs are at 430. Eventually, that could be taken off. So that's a stock which looks interesting in the PSU railway basket. In the private basket, we've seen a breakout yesterday in Texmaco Rail. So that's a stock which was lacking behind the whole railway basket. Finally, that is also off the block. So Texmaco Rail and RITES look interesting in the whole railway basket.
Okay, meantime, Anand also wanted to understand from you what the outlook is when it comes to the entire hospitality sector. With renewed vigor, now we are seeing demand having picked up like never before. Rates as well have gone through the roof, and more importantly, a lot of the managements as well that we've been speaking to within the hospitality space are very confident about this demand continuing to sustain. What is it that you would like within the entire sector?
Well, this sector obviously is doing very well. There is no question. You can see the both the ARR, the occupancy, and the room rents are much higher than they have been in the recent several years now because of COVID and after. So the delta obviously is in favor of these companies. However, you have to remember that these typically are fairly capital-intensive projects. And even a company like Indian Hotels, for example, has now put up a whole new segment where they are looking at uh, franchising out and taking over properties on a management contract basis rather than putting up money. So that's a model that works reasonably well, provided somebody else is willing to put up the capital. So it becomes more a services business than an asset owning business, which means that companies like Indian Hotels and some of the newer companies may actually be a little better positioned than, for example, an EIH or even an ITC group hotel business where they tend to own more of their properties. That said, I think this will remain a cyclical business. Near term, of course, the cycle is on the upside. So for the near term, I don't think that there is any issue in terms of owning these stocks. But you have to be careful about when the cycle turns because it will turn without warning. It's not as if the managements have perfect vision in terms of being able to forecast.
The other stocks which are going to be in focus. Yesterday, of course, there was Tata Consumer, Britannia, Nestle. These were all the names which are spiking up. Of course, the palm oil and other RMC costs easing off is definitely aiding some move on these names. But before that, let's just mark what the Nifty pre-open rates are indicating. And I think we should give some time for these rates to settle down because while the SGX Nifty was indicating a quiet start, right now these rates are all over the place. Though 18,700 is the print that you're seeing on the Nifty pre-open rates, and that's quite okay because practically we were pretty much there on closing yesterday as well. Mildly tempered up in the green for the Sensex, which is currently at 63,250 odd levels. But Anand, this fresh renewed vigor, which was already a very buoyant space, FMCG, Britannia, Nestle, the entire pack holding out. And even if you look at the earnings, I don't think beyond Dabur there was any stark disappointment, so to speak.
Well, yes, I think this was a case that one made last year that with the inflation peaking, with the inflation going up, strong brands will be able to pass that on and therefore will do well despite the fact that the raw material prices were up. The raw material prices now are down, and the prices at the retail end have moved up. So consequently, you would expect to see a margin expansion coming through. Volume growth may be a little more suspect this year, in my view, except for those again which are rural facing. So you may expect to see companies like Dabur actually do better. But overall, I think the consumer space has been reasonably buoyant, and I would expect to see some margin expansion in the current year, which means that the earnings will sustain. Overall, however, this is a very expensive space for the simple reason that you have companies which are still trading in the teens. I mean, where the earnings growth are in the teens by and large, and they're trading at 50, 60 times forward earnings. So you have to be a little careful about the segment you want to choose if you're not going to be surprised. That said, as I mentioned, overall the market direction is up, so therefore you would expect to see the consumer business, especially FMCG, do reasonably well for this year.
Likely to do reasonably well for this year. In the meantime, also wanted to understand, Anand, what the outlook is when it comes to some of the pharmaceutical names. Just today as well, there were some interesting notes that came out with respect to Fortis Healthcare, etc. Would you be very selective, largely owing to expensive valuations when it comes to the pharma space?
So I think if you're looking at healthcare, you have to break it up into the pharma and the hospitals. I think the smaller hospitals or the companies like Aster and NH, etc., have done exceedingly well over the last few years, as has Apollo, but Apollo is a little more expensive at this stage, perhaps. I would expect that that continues because the overall trend in that segment of the market is going to be more corporatization, smaller companies getting acquired, perhaps single standalone hospitals merging into chains and so on. So that kind of consolidation will actually favor the listed players, especially the larger ones. The valuations, no doubt, are a bit of an issue, but I think you have enough levers to be able to raise earnings whenever, at various points of time. So it's not like, they are overly priced compared to what earnings growth is possible. When you're looking at pharma, that's been a slightly depressed pace, I think largely because the API business has not done well. I think in the US, that is beginning to turn around now, and I would imagine that that should enable many companies who are somewhat under pressure over the last 24 months to actually do reasonably well. So in that sense, more than domestic pharma, which has been a consistent performer, I would expect the delta to come from companies selling APIs and generics in the US market and the developed market. And I think there are several of those which are listed which should do well.
Okay, Anand, stay with us. Lots to talk about while we're awaiting that 160-point move on the index to scale it up all to the life highs. It's actually the broader markets wherein the buoyancy continues. The Midcap 100 index already there at life highs and a 52-week high for the small cap index as well. So good time then to get in some midcap ideas from both of our chartists. Kunal, on your list?
I'll go with a high-risk bet. It's a buy on RVNL, the stock making a comeback after almost 1 month of correction from 140 to 113. So would suggest a buy with 140 as a near-term target, stop loss at 120.
Right. Naresh, what about your mid-cap ideas?
That would be a buy on Tata Power. The stock has been slowly and steadily making the moves, and we are seeing a good breakout across the power sector. So we've seen Torrent Power move up, JSW Energy is close to a breakout. So it seems like power as a sector is on the verge of a breakout. Tata Power has gone through a good 18 months of consolidation and say a move from 280 to 190. And now starting to make higher tops and higher bottoms. So this could be a stock which could make a short-term move. Stop loss at 212 and a target price of 250.
Okay, there you have it. There are your mid-cap recommendations. But let's move on then, and here are some of the other top stories to track. Video game retailer GameStop has fired their CEO Matthew Furlong without providing any reasons for his termination. The company has instead appointed the board chairman Ryan Cohen as the executive chairman effective immediately, and we did see the shares of the gaming giant plunge nearly 20% in after-hours trade. Meantime, Britain will host the world's first summit on artificial intelligence later this year to address the doomsday risk. The summit is expected to take place in the autumn and will gather like-minded countries to shape a regulatory response. Rishi Sunak's spokesman has said that this follows a G7 call for action in Japan last month. Meantime, New York City's air pollution has ranked the worst among the world as the wildfire smoke from Canada continues to drift over adjoining areas. As many as 20,000 people have been evacuated across Canada, with more evacuation plans waiting to be executed. This is the second day of the orange haze clouding visibility in the city, where authorities have asked people to wear masks outdoors. Meantime, Air India flight from Russia is now airborne for San Francisco, carrying all stranded passengers and crew. They've mobilized additional on-ground support to San Francisco to carry out the clearance formalities for all the passengers upon arrival.
Meantime, the IMD has said back home that cyclone Biperjoy will further intensify into a very severe storm over east central and adjoining southeast Arabian Sea during the next 12 hours. The Met Department has also warned of harsh weather and sea conditions in the next 3 to 4 days. Although when we spoke with the IMD yesterday, they said very categorically that the cyclone is not going to make a landfall into either Gujarat or Maharashtra. Also, Lionel Messi will be joining Major League Soccer side after Miami after leaving Paris Saint-Germain. The report also puts an end to the speculation of the Argentine legend's return to his boyhood club Barcelona. In fact, the transfer will be a major boost for American soccer, which has attracted superstars like Pele, Beckham and Thierry Henry as well over the years. Meantime, wrestlers back home, Bajrang Punia and Sakshi Malik's meeting with Union Sports Minister Anurag Thakur took place yesterday. The government has assured the wrestlers that police investigation against Brij Bhushan Singh will be completed before June 15th, until which the protest would be put on hold. And the fight for the ultimate champion of the Test tournament is on at the Oval Ground in London. The Kangaroos took control on day one, scoring 327 runs at the loss of 3 wickets. Australia's Travis Head scored his 6th century, or Test century, I should say, while Steve Smith completed his half-century. Both the teams wore black bands as a mark of respect for the Odisha train tragedy victims.
And typically when interest rate cycles they go higher, corporate banks do well. They get benefits because of NIMs. But when interest rates they start peaking out and if the economy is strong, NBFCs they start outperforming. Are we going to go through that phase?
Is that for me?
That's right, Anand.
Yes, absolutely. I would imagine so. There is no, they are wholesale borrowers, and therefore, obviously, in an interest rate upcycle, since they don't have the ability to raise liabilities, that becomes a problem. You are borrowing from banks. Once the banks find that they are not able to raise interest rates further, obviously, NBFCs, which are lending to a slightly more riskier set of clients and with perhaps less security, etc., are able to charge higher interest rates. So their margins are likely to expand. So for now, I would imagine that's the phase we are in. Assuming that there is no change in RBI stance, you would have interest rates frozen for a while, and that will mean that the asset book that the NBFCs put up will be able to give them a margin which is perhaps disproportionate to what the earnings, what the banks are probably able to raise at this stage.
Very much, Anand. Good to have you on board with your take on the markets. Let's tell you what the index calls are, especially as we are making our way then towards those all-time highs on the index, just about 150 plus points away. All our chartists are saying hold. That's the advice coming in on your position on the index, and that's a consensus call on the market moodometer this morning. With the Nifty Bank Index, well, you do have Kunal as well as Kush who believe that it's a hold recommendation, but Naresh is advising a buy on dips call, but the flavor is tilting in favor of a hold, and therefore that's what the moodometer indicates.
Counting down then for the market open, and not just that, for the RBI policy as well. Let's hear what the governor has to say, although it seems to be pretty much a given that it's going to be a pause this time too. But Kunal, I mean, I don't think there's a debate that the Nifty is going to scale that life high, but I think the bigger question is what's going to contribute? Is it going to be a new set of winners, or do you think it'll have to be banks which will have to do the heavy lifting?
So, yesterday, the second half was one of the first signs where we saw the large cap names like HDFC Bank, Reliance, Maruti, HDFC Limited, all of these stocks making a comeback. Now, if that is something to go by, then we can probably expect that hopefully the new high for the index could probably be reached by the participation which has been missing from these large cap names. So, it's a phase of the markets where initially the large cap stocks did pretty well. So, HDFC Bank, Reliance Industries, these stocks, they've done pretty well for themselves in the month of second half, in the month of April, somewhere in the month of May, and the couple of first week of the month of June. These stocks have gone into a bit of a sideways consolidation. But I think it's again a phase for the markets where possibly these large cap stocks can make a strong comeback. Till the time the health of the market is quite strong, the news flow is quite positive. I think it could just be a phase where these large cap stocks can make a comeback. Yesterday we saw the first signs, and hopefully the likes of HDFC Bank, Reliance Industries, which are very close to their short-term swing breakouts, I think they could make a very good comeback.
Naresh, hope pinned on Reliance, not just once, but time and again. From those 2,500 thereabout levels, where could it actually go?
So Reliance is the tough one because if you look at the charts, there is no momentum. We are just checking around that 2,500 mark. But if it can sustain about 2,500 for a few, say, more days, we could go and retest that 2,700, 2,750, which is the major top. But the momentum, the trend is not great. On the other hand, say the other heavyweight HDFC Bank looks better. That is where we've gone through a consolidation. It is much closer to the previous all-time highs. The structure is better. So Reliance Industries, as of now, looks sideways, and we've seen the stock has a tendency to go sideways for really long periods of time after a massive move. We've seen that happen in 2010 to 2017. We've seen that happen in 2021 to 23. We are yet away from a major move for now. So even at 2,700, 2,750, doubt it can break out above those levels as of now. So for now, keeping it on the sides.
All right, that's the view coming in on Reliance Industries. I wanted to get in your take as well, Naresh, when it comes to leadership within the banking space. As Kunal was alluding to, that yesterday was the first time that you saw some of these backbenchers off late taking leadership. What's your take on what that means for the Nifty Bank?
So for the Nifty Bank, it's interesting that two main heavyweights, which are 50% of the index, ICICI Bank, is close to a breakout, making a classical flag formation around 930 to 960 levels. That could take leadership. HDFC Bank, which has been finding support around that 1600 mark, 1550 to 1600 is a good zone of support. From there, it can again make a bounce back towards the 1700, 1750 mark. So these two names could be the leaders in terms of the weightage as such. An Axis Bank moving up, say breaking out, may not impact as much as a 2% move in a HDFC Bank or an ICICI Bank would. So for now, watching these two out, I like ICICI Bank. That could be the stock which could break out into new all-time highs. And HDFC Bank for a bounce. So HDFC Bank is the contra trade if one has a medium-term view. The stock has gone nowhere for the last couple of years or more.
Okay, getting